What's up, guys, and welcome back to the Inside View Real Estate Podcast. Today is a very, very valuable podcast for you if you've owned a house for more than 2 years. I'm basically going to show you how to make some dang money and save some money. Stay tuned for this one. It's a good one. Hey, good morning, good afternoon, and good evening, and welcome back. I'm here with the very, very charming and charismatic Josh Zuniga and his equally handsome brother. God damn it. Leo Zuniga, thank you for joining us today. Hey, look, today's a very, very valuable episode. I really want to talk to you guys about how much the homes have appreciated here in Phoenix, especially. We're talking about Maricopa County generally. Yeah. I know we do business in multiple states. We'll talk about Maricopa County and how Leo can help you extract a lot of the equity that you've built over the past 2 years.
Equity's a big thing.
Equity's a big thing. Like,
huge.
And put that money to work, because right now it's locked up in your house. And
yeah.
You're probably spending more money than you need to on your mortgage, on MIP. Yep. We're going to show you how to get rid of that, and we're going to show you how to actually take some extra cash out potentially and refinance and pay off some other debt. So, Josh, in the past year, what was the average appreciation here in Maricopa County?
19% for 2020.
19%. Okay, so Leo, what is generally the minimum down payment on a house?
Generally 5%.
5%. Okay, so we take 19%, we take 5%. Now we got 24% worth of equity if you bought the house in the last year. Now, if you've had your house for 2 years, you're probably looking at like maybe 30% equity. What's the magic thing that happens when you have 20% equity?
So the magic thing that happens is that mortgage insurance falls off.
Okay.
That could mean a couple $100 for
That's
you
just
per
expensive.
month, just alone.
How much is MIP or PMI?
PMI, typically it's based off of your loan size and credit score.
Yeah.
But on a, let's just say $300,000 loan, you're paying about $250 a month in PMI.
Explain what explain what PMI means, because everybody's like, what's this PMI thing? Why am I paying $300 extra a month?
PMI stands for private mortgage insurance. Okay. And what it is, it's essentially an insurance policy to cover the rear end of your lender.
Wait, it doesn't cover me?
No.
Bro.
You are paying you are paying insurance to cover your lender in case your loan goes belly up or something, you're in default.
Okay. So they charge me $300 a month to cover their own ass. I pay for it, and I'm paying my interest rate. Sweet. Okay. So, guys, here's what I want you to do. I want you to call Leo. Leo's my boy. He's going to hook you up. He's going to get an estimated value for your house, and he's going to say, hey, your house went up $70,000 over the past 2 years. And he's going to be like, you can actually pull out $20,000 or $25,000. You can drop your interest rate from maybe what it was 2 years. What was it 2 years ago? 4%?
4.25.
4.25. Yeah. Okay, we're going to get down to 3.25%.
Yeah.
So we're going to save you a point, on your interest rate. We're going to drop MIP, which is another $200 or $300 a month. Right. And then Leo says I can get another 20 G's. Okay, so Josh, what am I going to do with that 20 G's I just got?
Well, we were talking about this before. I personally would like, hey, let's put that towards another house, put it towards another investment. But I know a lot of individuals, especially millennials or even people coming up or just getting out of college, they have a shitload of debt.
Yeah, at high interest rates.
Yeah, at high interest rates. Even with their credit cards, 16, 18, 19%. So if you guys want to do yourself a solid, one, if you have the ability, if you don't have that much debt, cool, put it into another property. If you do have that debt, but you're looking to purchase maybe in like 6 months or to a year, you want to alleviate that because, like Leo was talking about before, your debt to income ratio is not looking too hot. So you need to pay down some of those debts, either in one lump sum or make a nice chunk, towards it. I think that's one of the best options you can do that allows you to do it. And guess what? The market did it for you. You didn't. It's like the equity in your house is your own bank account. That just increases just with the market does its own thing.
Yeah, that's why we buy real estate.
Exactly. Yeah. That's one of the perks of doing real estate. So where else would you be able to save that extra $20,000, $30,000 in those 2 years? Your average person will not do it. The average person probably has less than $5,000 in their bank account right now.
Yeah, it's insane.
It's a huge option.
Yeah, but there's a ton of equity in the house. Okay, so I'm going to break it down for you in steps. We're going to keep this very, very short. Step number 1, get your credit in check. Check yourself before you wreck yourself. So go on creditcarbon.com, and what I want you guys to do is pay down as much as you can to get your score above 720. So your consumer credit lines, your credit card debt is one of the most influential things when it comes to your credit score. Understand that. That shit is rigged, right? Mm-hmm. And so they say that it only makes up 30% of your credit score. It happens to be the top 30%. It's fucked up, right? So we're going to pay off your credit cards as much as you can. Whatever remaining balances then you're going to have, I want you to call Leo. Leo's going to help you do a cash out refi. We're going to get rid of the bullshit mortgage insurance premium, the MIP or the PMI, depending on what you have. You're going to save $200 or $300 a month there. You're going to pay off your credit card debt. You're going to save thousands and thousands of dollars in interest just by paying off the credit cards. Your credit score is going to go up. Then you can maybe refinance your auto loan with a credit union and get it down to 3%, or I'm paying 2.99% right now. You got that hooked up, and then you're going to call Josh Zuniga, and you're like, damn it, Josh, I got enough money for a down payment on a small investment property. Let's go, right? And now we've doubled up, paid off all your credit card debt, increased your credit score. Now you got you're rocking a 720, 740. You know, you can put a little bit of money down on an investment property. Josh will hook you up, and now you got cash flow. Now you're building a portfolio. That's some smart shit.
That was a $5,000 little nugget right there, guys.
Yeah.
Easy.
I just made you guys
Easy.
like 30 grand a year.
Yeah.
Like no joke.
Leo, as far as like say I bought a property, 2 years ago at 200, it's worth say 270 or 300, thousand right now. Tell me what is the steps and what is the process to actually do that, and how much can I actually pull out? Can I pull out that whole 100 or no?
No. The
Okay.
only time you can pull it all out is if you sell your house.
Okay.
Okay. Now, if you're not looking to sell, then you can actually bank out 80% of what your home is worth.
Minus the mortgage that you have currently.
Correct.
Do I
You
have
gotta
to? Do I have to be 20% invested in order to do a cash out refi, or no?
No, you do not.
Okay.
No. So it's all based on your home's value. So if you've got a home that's worth $250, okay,
Yeah.
let's say you bought it for $180, you can get another $20,000. I've got a client right now who's going to get $30,000, and I'm still lowering her mortgage by $150.
That's awesome.
So she's going to get $30,000 richer to pay off some debts, and then also have a nest egg and do some other things she wants to do, and then also paying less in her mortgage. And I'm giving that.
Yeah, there's one caveat that I need to make people very, very aware
let's
of.
get it
You
clear.
are extending credit card debt for the life of a 30-year loan, right? So you got to be a little bit careful about this. And so, you got to take the money that you were spending monthly on the credit card and put that back towards your mortgage. So treat that credit card debt as the same amount of debt, the same monthly payment, just add it onto your mortgage, every month, so that you're not dragging that consumer debt out 30 years, right?
Yeah.
So you got to be kind of careful. So there's a little bit of caveat there. Yes, you're going to save monthly, and that makes it great. So like if you have a tight month, you've got that buffer, right? But the months that you're, flush with cash, pay off that mortgage. Pay off as much debt as you possibly can. It's Dave Ramsey,
Yeah.
101.
There you
Absolutely.
go. Yeah. And
Power
Leo-
of $100.
Yeah, there you go. And Leo, are you seeing a lot of cash out refinances right now with the appreciation rate that's been going on?
I'm seeing a fair amount of cash out refinances. A lot of people are doing this, exactly what we're talking about, buying other properties, getting themselves up to set, buy a second home, buy a log cabin, whatever they're wanting to do, they're
Right.
doing that exactly. But they're also minimizing their household debt.
Yep, there it is.
So guys, if you guys are looking to do like a cash out refinance, make sure you talk to Leo. This can literally change the trajectory of your life and start you on the path to creating generational wealth. Not only is it going to help you in the short term if you have to pay off some debts, it can help you in the long term if you decide to put that equity into purchase another property. And we can teach you and coach you on how to do that for even as low as 5% down, guys. So usually people think that you have to put 20% down on a second property. There's some tricks that we can help you with. So please stay tuned for the episodes because we are going to tell you exactly how we can do that. If you want to get in touch with us on a basis, we have all our contact information below. But please make sure to contact our buddy Leo over here because he's going to do a cash out refinance or even refinance you. And actually, we can get you approved for a home loan. And we can also put you in touch with our parents who are in Arizona Advantage Plus credit reporting if you need help with your credit score. So this has been an amazing episode, guys. We wanted to keep it short for you on this one. So you have a wonderful rest of your day and a beautiful week, and we'll see you on the next episode.